This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. I'm going to give you a stock market update for Friday morning. Now, we had something take place for the first time in a while, and that's a big move in the small caps and a reversal to the downside in some of these big cap names. Let's take a hard look and see how important this actually was. All right, before we get going into that, let me just tell you, if you have an interest in some of the ways that I'm using technical analysis, I would suggest starting with the book. I'm offering at a discount right now. You can go to rabilstockresearch.com/book for more information. Also, if you like the content, please hit that like button and also subscribe. Okay, let's start out with these market conditions. The sentiment didn't change very much. We went from 46% more bulls than bears than 45%. And again, I'm using the Investors Intelligence Sentiment number because I've been using that for approximately about 30 to 35 years. When we get up into the mid 40s like this, it's definitely more of a danger zone. Now, even though the S&P pulled back a little bit, kind of gave back a little bit of its gain yesterday, or for the week, I should say, the overbought, oversold oscillator, the RSI 5 is still up around 90. All right, so not a big change for that weekly line. It's going to take a little bit more to get that to reverse back down. Now, if we look at the, so we've got the sentiment dropping slightly, but really still in a little bit of a danger zone. And we've got the overbought, oversold in that, I would say, overbought condition that we should be expecting some kind of a pullback. So both of those are negative. I'm going to run through the rest of the conditions. The weekly volatility is at neutral. I'll explain that in a second. The daily is back to positive. It did get a little bit of a pop yesterday, but let's see if there's any follow through. And then the trend in the momentum are still bullish on across all time frames. All right, let's start looking at the charts themselves. So one of the things I wanted to point out here is the fact that we have crossed down below the moving average of the average true range has dropped down below the moving average, the 18 MA, but that 18 MA has not rolled over. It's going to take a little bit more time. Maybe next week we'll start to see that tip down enough to switch this indicator also to positive. But we want the line below the moving average, and we want the moving average declining. And that's the type of condition I'm looking for if we're looking for lower volatility. All right. Now, if in fact we get an increase in volatility on a pullback or something like this, and this pops up before this turns down, then we're going to be back in sort of a negative vibe there for the weekly average true range. Now, the daily has been down for quite some time. Even though it popped up through here a few times, it gave it right back up. Now, we did see some pretty big volatility yesterday that in the last couple days, relatively speaking, and that's gotten this to pop a little bit, but it's still below the declining moving average. So no real change in the indicator at this point. All right. Now, let's look at what I want to do is actually look at a couple of different indexes this week, just to make sure we're staying on top of everything. So for the first time, like I say, we actually saw a little bit of selling. Now, it doesn't even show up on the daily. I mean, you don't even see it on the weekly, right? The monthly is still green. We got a little bit of a tail forming on the weekly potentially. Nothing's changing here, right? And then we got a little dip in green DI. Red DI didn't even pop, right? Because we didn't take out a low. We didn't make a lower low. We're not creating any red DI. Remember how that's calculated. We have to see this go a lot more than what it did. It was just a little bit of a break below the prior low. So you don't get much DI in that situation. We need to see more strength to the downside if red DI is going to pop. Now, the ADX got up to 52 on this move to the upside. I mean, that's a really strong condition in place. And the ADX on the weekly is at 40, and then we have a rising ADX on the monthly at 28. So again, I'm not looking for, this could top right here. All right, it's possible it could top, but I'm saying the likelihood of it dropping quickly and falling apart, I think, is pretty small. It's going to have to go through a period of distribution with these type of conditions in place. That's how I read this, all right? I'm not saying that it can't tomorrow crash. I'm just saying the probabilities are, if this is going to top out, it's going to take some time. Now, we did see a little bit of action in terms of the selling, but look at how the ADX is still in pretty good shape. The MACD is just working its way back to the zero line. So on this chart, 1 day's worth of action, and I know it was pretty negative, but it didn't do that much damage yet. All right, now just to compare it, let's just see what took place here on the IWM. I mean, this is a huge move to the IWM. What we were talking about is the potential of this crossing back up through 210. This is what I go through on my Wednesday show now for Stock Charts TV. I go through this each week with the QQQ, and what I was saying, we wanted to see a big green bar, and I would call this a big green bar. You connect this and say, you know what? I mean, this is a lot of strength coming up through this 210 area. Now, we want to see some follow through. I mean, if this gives it right back tomorrow, even half or something like this on Friday, then I think I'd be a little bit more concerned. But the condition in place with this reverse divergence right at the zero line with low ADX, I think this is pretty decent. And obviously, we're starting to see a little bit of strength. The low ADX condition is being confirmed by a breakout with green DI above red, and then we get the breakout. So let's just get a little follow through, and I think that would be an encouraging sign. Now, let's just take a quick peek at the QQQ. This was a little bit more egregious in the way that it dropped. I mean, you can see the big red bar. You can see the red DI. Let's just show this on the daily chart. Now, I mean, the MACD is actually in pretty good shape, but you see see the difference when you get this much DI? See how that red line pops like this? So if we get any more follow through, we could see a potential contraction form on the QQQ, which I think would be healthy to see more consolidation in some of these big top 10 names. I mentioned for the subscriber video this week how the top 10 names now make up 37% of the mark of the S&P, all right, of that index, all right? It hasn't happened since 1972. I think that's a big deal. I think we got to be a little bit more careful, especially about those stocks. Now, what's good about what's taking place here is the money isn't exiting the market. It's rotating, right? We see the move in the Russell. This is what we've been waiting for. This should really improve the underlying conditions for trading, okay? Now, I do want to take a quick look at the Dow Jones as well, because there's a lot of stocks inside the Dow Jones that I think could benefit in a move at the QQQ or the big names in the NASDAQ start to drop off. There's definitely some signs that we could see money rotating into maybe industrials or financials. So something to be on the lookout for. Again, we have a reverse divergence here, but we have better strength in the Dow, a better overall pattern. Definitely worth going through and taking a look at some of the non-tech stocks inside of the Dow and see if anything looks attractive. Okay, if you have any questions, let me know. Have a great week. We'll see you next time.